Good morning, everyone, and welcome to Infrastructure Matters again. We are episode 62, and I am here with Dion Hinchcliffe, and Keith Townsend is on the road. He's been at KubeCon, so we're going to have to wait till next week to hear everything about what he's been doing. If you haven't caught him, he's been wearing that cowboy hat all the way through.
He has had it been all over the country this week. So.
Tall man and hat. So there we go. So lots of earnings this week, really strong things coming out. Of course, everybody knows how the market has done really well. Thank you very much for whatever politics have contributed to this, if they have. So we've got that to cover. We have got just a bit of, AI supercomputing stuff that's coming up because next week is big Supercomputing 24 in Atlanta. And then Dion has got some great CIO study results. So he's going to kind of walk you through what we've got there as well. So let's start out with some of the earnings because Kyndryl just released theirs early this morning. Early. It's kind of like Hong Kong time, I believe is what it is, or Chinatown time. Really incredible numbers. They're up 24% in revenue.
Wow.
I know. I was like, wait a second. Let me peel that thing back there. Pretty much double-digit growth all the way through, whether or not it was the device group, which has got the PCs and the phones and everything else, or whether or not it's the ISG group, which has got the servers and the HPC and the storage. The big number was ISG up 65%. Now, they had been kind of pressed down a bit, and then they've kind of taken off. Storage and software is up 35%. Neptune, which is all the scream and yell that I know we're going to hear out of supercomputing because I'm seeing all the pre-announcements for it, which is the liquid cooling capability, which is super rage. In fact, I have a meeting with Valvoline next week. Yes, we're at supercomputing. It's kind of.
Who would have thought?
I took it just because I'm curious about what's going on. It's not that I really cover it. The only thing I'll mention is that, while highly profitable in terms of the PC grouping and the services grouping, the ISG is still taking a hit on an operating loss, much less than it was before. But they're still working on profitability there, which means to me saying, okay, so I'm not sure if a lot of their market take this time around was because of the pricing actions or whatever they're doing, but I know there's a lot of competition in there to get the footprint, et cetera, that's in there. So very congratulations to them still. I think, we'll probably see next quarter as they go through the next quarter, they'll probably get to the profit on that group. But that's kind of what's going on there. And you had Cisco.
Cisco released their earnings this week. And it wasn't actually that bad, but the market wasn't thrilled overall, and the stock is down this morning. I've been following the Cisco story since the beginning, way back in the day. And what a storied company, and they're kind of literally defined the tech world in the 90s and early 2000s. And their networking sales fell actually in this quarter. It's their security products that are doing particularly well, and they really surged. But one bright spot in networking was artificial intelligence. Of course, that's the topic du jour. And as they apply it to networking, they're actually doing those sales did pretty well. So they were able to prove that they have a path forward. As they've tried to kind of find out where are they going to be in this new age of AI, and they now have an AI product. So, forecast was just okay, and so I think it's kind of disappointing to me to see what I think they had tremendous potential, and they just couldn't figure out how to remake themselves the last couple of tech generations. So we'll see what happens with them.
I'm really surprised to hear that the networking is down, but that may be because there's more competition coming in the markets with everything.
I've been touring network makers. Last year I did a tour of Europe, and there's just much lower cost places that can provide extremely high equipment, high quality equipment. And a lot of these factories are incredibly robust. Most of them are entirely automated, so that from the time they're putting the chips on the PCBs to the time they're packing these things in the boxes, a human has never touched it. It's amazing. Literally, just pallets come out the other side of the factory, and in my experience, Cisco's amortized, not upgraded their factories to the extent that these guys have. So I still don't know how they're going to compete.
Wow. Changes in how we manufacture for sure.
Yeah.
So the other big earnings that I took a look at was Kyndryl, and that was the week before. Kyndryl, as most of you know, is the spin out of the outsourcing business from IBM that happened a couple of years ago. It's been a big turnaround. I mean, people scream and yell about whatever their earnings are because they've been losing, they've been showing losses of money, but it is a turnaround business.
Mm-hmm.
And what's happened over the last 2 years is they have really gone through and prioritized accounts, getting rid of the low margin business that they had. That probably for IBM made sense because in the low, maybe low margin services, but you made it up on the hardware kind of thing might have been why they took those deals. But they were delivering. I'm not sure if that's my speculation.
Well, it used to be to get the deal on the IBM side, they would have to provide the services to make that deal successful. They made money on one side, but they might not make so much money on services. Now, Kyndryl doesn't have that option. They have to be a much higher quality business in general.
Yeah. So they've. This is definitely, they have moved in. They grew the business in terms of the revenue. They're in terms of subscription or renewal. I should say the renewal contracts is way up. So the customers are coming back to them. They have created Kyndryl Bridge, which is a AI ops tool that completely manages that the customers use as well as Kyndryl uses. That has had a significant impact on their labor costs in terms of the staffing, about how many fingers and hands do you need on the system to operate.
Oh, that's like a margin creation tool. Yeah, that's amazing. And I've been bullish on AI ops for years. The IT has been way too manual for way too long, but it's because it's so much variability in edge cases. But AI seems able to tackle that. So that's a great story. I'm glad to see that.
It sounds like it's really fascinating, as well as one of the things we heard back when the CrowdStrike happened. Kyndryl didn't have the problems that the other people had. And so this is part and parcel part of this Kyndryl Bridge capability as well that they have. So, to me, that they are well on their way to being a very formidable player into this market and bring out the services that are needed. So, yeah. Oh, the other piece that really came out for them is they have grown their cloud business significantly. So their partnership with AWS and Azure, they didn't really talk about Google much, but the AWS and Azure pieces, they're really working with their clients to help them understand where things go, as well as mainframe modernization. And that might be using the cloud for doing probably mostly development kind of work, but that's the other place that they have really grown their business.
Yeah, no, it's great to see what they've done with that, and of course, IBM doing so well. IBM is practically resurgent these days. People could kind of discounted them for so long, and they're really doing good. And a lot of that is going to flow back over to Kyndryl as well. So I think it'll get a lift from that, long-term partnership, obviously.
So there were some other announcements. As I said, we're going into supercomputing, and my inbox is just massively filled up with all kinds of things that are at supercomputing. It's sold out for a lot of reasons. Supercomputing used to be, what I would call the little propeller head kind of folks that were there. It was all PhD people, a lot of students down there. It was the reign of all the research institutions as well as the labs. And now it is probably going to be, ground zero for AI, I guess, is kind of what we're going to see.
I would absolutely concur. Yeah, it used to be number crunching, and we had HPC, high performance computing, for all these statistical and analytical tasks, and now they're finding intense relevance in the AI space. It's fascinating.
Yeah, and one of the big themes coming out of there, coming through, as I can see with the announcements happening, is all about liquid cooling. And it's not my core coverage area, but there is a rash of announcements going on liquid cooling. And that goes back to, when it was talking about Lenovo, Neptune is up 38%.
Power density is everything as it's turning out, because the GPUs are getting bigger faster than their performance is improving. So they're finding it easier just because it's already massively parallel chips. They're just building bigger and bigger GPUs, and the power density is causing a real cooling problem. So liquid cooling has come back from kind of languishing to the hottest technology to build a modern data center, and it's all about AI, GPUs, and getting rid of all that heat, which is a real problem.
Which I think is really necessary, very, very much so necessary. We're going to see, new types of data centers that are set up in those environments. So the other areas, and I'm going to cover the rest of the announcements next week because there's so many coming out. We'll kind of lay them out. We had a few other announcements that were not supercomputing based. NetApp came out and refreshed almost all of their product line, their entire all flash FAS. A series as well as their C series. So the high performance ones in the C series is their capacity one at the QLC. They've done some refresh work with Storage Grid and bringing out clearly QLC over there. And then the little known guy called the E series that they have that nobody ever talks about, but we've kept on covering it because we've known that it's been very powerful in the HPC market. So it's the old LSI boxes that they bought many years ago. And that, for a while there, we thought they were going to jettison that thing to the other side. But now that AI is back and you have to talk AI and HPC, you've got your north-south kind of capabilities, which is going to be the E-Series. East-West is going to be their other products to, in terms of how they're going to address the market and the needs that are there. So that's those guys. And then we had, Pure had a little bit of an announcement that was this low-end entry-level box, which it seems like a lot of people are driving to that low-end entry-level box to kind of address the HDD market that is needing to migrate off of HDDs over to solid state, we think. So this kind of runs that down. But you had some really big announcements on AI stuff, on language models, right?
That's right. So Google recently released, or they just released a new language model with the exciting tag of 11.14, which I guess they're putting a date on the time they released their model. But for the very first time, Google AI has a model at the very top of the AI leaderboard. So if you look at LM Arena, which has really kind of become the definitive standard for how different large language models rank. Google has that at the top. Chat GPT has been dethroned. Claude's been up there a few times, but GPT-4 or some flavor of GPT-4 has been at the very top for almost the entire time the LM Arena has been out. Google finally can say that they have the most superior, highest performant AI LLM, and that's a big deal. Google really needs this. I guess Google, frankly, has really struggled to make inroads in the cloud community. Microsoft is almost ascendant. They're growing faster than Amazon. I have projections that I've done that within 4 years, it's actually possible Microsoft will eclipse Amazon. Google has been this kind of very consistent number 3, and they just haven't had a standout service. And to have the best AI service is a really big deal for them. And if they can stay up there, this is going to be really good for across the board for Google Cloud, and they really need that shot in the arm. So it's good to see because we need competition. As we saw with CrowdStrike, having an IT monoculture is not a good thing where everyone's using exactly the same thing and everyone ends up with the same problems. We need a healthy mix. We need competition, and this really shows that Google's in the AI game in a big way. And so I was really glad to see that one.
So maybe for our listeners, you could talk about what Marina is all about, and we'll post the link in the notes someplace so you guys can go to the leaderboard on site. But talk about what are they measuring, how are they measuring, and how do people that are your normal everyday CIO use that data?
Well, yeah, absolutely. So it's very hard to compare apples to apples in the AI world, or it was at least for a long time. And then the industry developed these large suites of very sophisticated test panels. So they might have 10 or 20,000 very sophisticated language reasoning word problems, and they really stress test a language model. So they'll have a reasoning test suite, a math test suite, and a variety of other test suites that have all kind of been standard. Anyone can download these. Anyone can see what the test data is. You can test your own LLMs or your own internal models against these benchmarks. They're now very easy to run. And so LM Arena, what it does is it's a site, I gotta look up the URL again. It looks at lmarena.ai. And you can see in real time all the latest models and how they perform against each other using a standard test suite. You can see how well do they reason, how well they do math, or whatever it is. And for, like, math is really important because large language models are notoriously bad at kind of very deterministic outputs. They're more they do much better at probabilistic type work. But you can see this, and so but models are optimizing for these different test suites so that they can actually do them better and better. And so LM Arena shows how these large language models shape up, who's at the top. So if you are and have a cutting edge use case, or you just want to future-proof your organization, you can see who is ascendant, who's staying up there at the top and consistently putting out the highest quality, most performant AI models. And LM Arena updates the results as soon as they complete a benchmark. They post the new results on the leaderboard, and you can see how everyone's doing. And so I do encourage you. It's a great way to stay abreast of how the models are doing. And you can see open source models closing in on the commercial models. Normally, it's commercial models are at the top, and then the open source ones are at the bottom. But the open source models are climbing up, so it's a really good way to stay abreast very quickly if you're an IT leader on what's going on in the AI world.
Are you really expecting the enterprises to switch different LLMs they're going to be using on a regular basis? I mean, wouldn't they, as a normal practice, kind of go with one and stick with one for a period of time?
Well, it's been hard to say. I mean, that's a great question, Camberley. The belief was that there was going to be regular breakthroughs in LLMs, and that you might want to switch, or that certain LLMs might be much better at a different task, and that's certainly proven out in terms of cost effectiveness. The cost effectiveness is where models are really varying now. Like IBM has a new model.
Granite?
Sorry, say it again. Yeah, Granite, which is very highly performant. It's not at the top of the leaderboards, but it's 10 times cheaper to run. That's a really big deal for the CIO who has to deliver IT on a very well-defined budget that their CFO really encourages them to stick to. And we're seeing AI is causing overspend all over the place. Budgets are breaking everywhere because it's very expensive to run. So, it is important. I think most companies will end up with several dozen to several hundred different models that are optimized for either very specific tasks. Like there's now large language models, medium size models for IT service management. They're really optimized for that task, and they've been trained in that world. And an IT department might want that because it could be up to 100 times cheaper to solve a problem using a medium-sized LLM optimized for IT use cases. So, there will be, I think, what we call model gardens or model hubs in most enterprises, and we see that forming now.
Oh, okay. So that's the next generation of what we're going to be seeing in the enterprise, and also why your toolkit, the flexibility of the toolkit that you're deploying now in terms of the enterprise needs to be there, in terms of being able to swap out whatever I want to get the latest stuff.
Well, and that's where Google and Amazon have made big bets, and that they say you can run any model in their environments. They give you some default models that are very good. But they specifically create environments where you can have these large, well-managed model gardens that have all the right guardrails on them and run them consistently. So I think that's the future. Yeah.
So we're going to continue on. So for those of you who don't know, Dion is our CIO leader for the company. He's got a very strong following in the market, and we've been working on Futurum has been working on publishing decision maker trending information survey work in multiple different areas. We've come out with revving over right now AI chips. We've got cybersecurity. We have app development out there, data, as well as market sizing data. And in particular, what Dion has been working on is CIO study. Doesn't have an official title yet, but right now, CIO study is good enough. And so very, very exciting. So not only, is it the survey work, but it's also you're spending time with these guys on a daily basis, talking to them. So getting that voice and that power of what's going on their mind. So maybe you can give a few highlights about what's going on. It's going to be out at the end of the month. So you're looking at sometime around on November 30th as we're going into
Just after Thanksgiving. Yep, exactly.
Thanksgiving. So maybe you can give some highlights about what's coming out with this data and what's it looking like.
Yeah, absolutely. So we do have a working title. It's called CIO Insights, and you'll be able to get this data and drill down and slice it and dice it inside the Future of Intelligence platform if you have a subscription. And as we update the survey, you'll be able to see live. Most people only get insight into what the largest IT buyers in the world are doing every year. But we're going to provide a snapshot every quarter, and it's interesting to see. There's some obvious results in the study that we see that 90% of CIOs are going to focus on leveraging AI for strategic transformation or automation in their business, and that shouldn't come as a surprise to anyone. But I can confirm that signal. AI was the clearest signal in the survey. But also legacy. What are we going to do about the 30 to 40 years of IT we've accumulated? So 80% report that they're really focusing on prioritizing migrating legacy apps to the cloud specifically. That's the largest signal I've seen on that trend. It's always been a steady grind. We got to move to the cloud. We got to do something about all our legacy. But there was a big uptick. I think as application portfolios age out. A lot of the old hardware and a lot of the old systems that they're having to retire those. And now is the time if you're going to make the move to go to the cloud. We're seeing a lot of migration off SAP on-prem, for example, to SAP Cloud. And in my CIO conversations, that's also been one of the hottest topics. Everyone's doing an ERP migration right now to the cloud. Is what it feels like out there. Talent issues remain one of the biggest challenges. That was almost as big as the leveraging AI story, and that they just can't get the right talent to deliver on what they need to do in terms of new development in IT, which is mostly around things like AI and analytics and cloud migration. Getting the superstars is hard because the superstars are really moving to the tech companies and the big service providers. If you want to work on a bunch of really fun projects all the time that are in a bunch of different fields and get to the top of your game, you often will go to a service provider because you'll be working on a bunch of really exciting projects that are constant flow instead of building something and then going into maintenance mode for 10 years. So that's a real challenge. And I think probably one of the most important signals is very loud signal on what CIOs are going to do, where they're going to put their cloud workloads. Now, we've seen this rising up the last 2 years and saying, well, is public cloud always the answer for every workload new workload that we create? And we started seeing last year the answer was no, it's not. There are for certain always on or very high performance workloads like training AI models. It may not make sense to pay that whole CapEx bill, marketing, cost of sales, everything to a cloud provider just to run your workload. It might make sense if you're to colo or build a specialized data center, a small data center for very high performance workloads that would create a very large bill from your hyperscaler. And so 71% of CIOs are reevaluating across the board where they're going to put their workloads in the future. The signal was not moving a lot of them now, but they're in the middle of reevaluation. So expect big changes in the industry over the next couple of years around that.
So, Kay, how do you resolve that last statement that you said, 71% are reevaluating where to place the workloads? And the other piece of data, which you said 60%, they're trying to move their legacy workloads to the cloud. And I mean, the legacy workloads have got just as much data, good data, that they're concerned about letting out of their four walls because of privacy and IP, et cetera. So those seem to be contradictory statements. But
that's a very good insight. Exactly. And what you have to realize is that when people say cloud now, they don't mean public cloud. They mean a cloud model. So it could be private cloud. So, there's a whole raft now of providers that are saying, well, we're going to give you a cloud and we'll give you a pay-as-you-go cloud. And that could be in our data center. It can be in a colo data center. It could be in a hyperscaler, or it could be your data center. And it's all one pane of glass, one stack, one everything. And so that's why companies like HPE are doing so well, in that they are saying you need to have that choice. You need to have the flexibility to run the workloads wherever, out on the edge, in your data center, in the hyperscalers, wherever it is. You need to have one stack and you have one management console, one pane of glass to manage it all. So when we say cloud, we mean the whole spectrum, public and private and edge. So I think that's when they say moving into the cloud, that's what they mean. It's that whole spectrum.
Well, that actually even may pan out well for a Kyndryl kind of discussion, right?
Yeah,
Because
of course.
I'm giving you, here it is, here's the tools, et cetera, and depending upon what you're looking for. So, yeah, that's looking forward to see the data and coming out and seeing where it's going. That's very, very exciting stuff. So, I think we are at actually, I've got one more item and I forgot to mention. Yeah, I was at the Veeam analyst conference, and Veeam is a data protection company. Used to be this cute folks that were always taking care of all the VMware environment. Well, they're no longer the cute little guys. They're big. They're a big firm. They should top out at one point, over $1.7 billion this next year, which is, for AR, which is pretty significant. And so they break, when they do an analyst set, they bring us all in and want to tell us how wonderful and great they're doing and where they're going, et cetera. And so they had the entire executive team there. The COO, CFO, CEO, CRO, et cetera. So I did get time. Yeah, actually, we did get time to talk to I sat down with the CFO, and he was talking about where they're going and how they're going, how they're going to reach it. But the big thing that they're betting on, so they built their company on VMware and the explosion of VMware. So then they've grown out and built out to more of the enterprise. And I won't say that they can completely take over TSM or IBM Protect or Net Backup, but they're doing a darn good job in some areas of taking a big chunk of that, modernizing the data protection capability work. The other big thing that they did, and this is where their announcement was this week, is working with Azure. And because that is the first use case that we've seen a lot of the enterprise go to, is using the cloud to do a vault or do whatever they're going to do up in the cloud, is doing the data protection. Because it's just a great place to place it, get rid of the tape. They've got rid of the tape or whatever they were doing. But one of the problems with doing that is if when you start restoring, you have egress fees, you have API fees. So what you think is the cost of storage ends up tripling or quadrupling in terms of cost with all the other charges that come along with it.
My research, egress fees are one of the number one reasons that people move to a private cloud, for that exact reason. If you have very what are called chatty workloads.
So they have negotiated with Azure. They now have a service offering that you're just going to pay. You just pay them, and they're covering the storage cost or whatever cost. Here's the cost. And even more importantly, since Microsoft came out and said you have to protect your Office 365 capability, that's not our responsibility. That's yours, and take care of it. They have doubled down on that market. And I think really smartly what they have done, instead of saying, okay, I'm going to charge you for terabyte or whatever, I'm going to charge you by user. Just so I have a user and I have data protection. I know my costs are, here's my cost. It doesn't make a difference. It's just kind of like that, click on, add on into it. And so it's a really strong joint relationship with them. And that shouldn't take anybody by surprise, because if you look at the C-levels at Veeam, they're all former corporate vice presidents of Microsoft. So anyway, so it was a great conference. They will have a note coming out with it. We're not sure which of the stuff we can talk about yet, because they said everything was NDA. So we'll publish some commentary on it, but they've got some big growth plans. And I think that they've got the group there to make it happen. So, well, that is 30 minutes. Oh my gosh.
I can't believe it.
It's amazing how fast this time goes. Guys, thank you very much. Next week, we will have all three of us back. Lots to talk about. We'll break down QCon, supercomputing, and Dion, where are you going this week? Are you home this week or are you traveling?
Not this week, but next week we have Microsoft Ignite in Chicago. That's a very big event, and I'll be.
Are they? Is that a big bet?
Yeah. I think some people have heard of them, but I'll be broadcasting the CIO Pulse Report live from the show floor, so
Cool.
it'll be fun.
Great. All right, guys. Thank you very much and have a great week.